Okay, what's going on, everybody? I am Jonathan Thompson with Market Menace Trading. Welcome back to the channel. Okay, guys, real quick, just wanted to go over a few things that I'm starting to see on the chart now. I am in a live trade, currently up about 75 on the trade. Again, I just entered on this fair value gap here. Stop loss is down here, just below this order block. And now what we are starting to do is we just had for the first time in hours, for the first time since about 12:40 this afternoon, we finally had a bullish break of structure of a previous swing high, which was here. Okay, so what this means is that we set this swing high, came back down. We actually fell outside of a longer term pattern, which was kind of like the symmetrical triangle. And there's so many different ways that you could have drawn that, but the point is always the same here. It ended up having all kinds of liquidity sweeps on the trend line, the buy side liquidity getting taken multiple times. You can see that here. You can also see that very, very clearly here. And before we had the ability to break out of this, and actually we still aren't really out of the woods yet, but it is finally getting a nice move. We ended up having a huge, well, not huge, but we had a pretty dramatic relative to the pattern pullback, a break of the support that we had here, and we came down and started forming a pretty nice order block here. And we ended up putting in a really nice reversal. Now, Bitcoin really likes to do this a lot. It will do all kinds of head fakes, particularly as it reaches the end of consolidation patterns. So, you know, it loves to just like shake out all of the leverage in Bitcoin. It loves to just shake those traders out. Absolutely destroyed anybody who went long anywhere in this pattern. Destroyed all their stop losses, and then started to march back up. This is the hourly chart here, and it's been, you know, pushing ever since, at least on the hourly time frame. Now, if I zoom in on the chart, you can, you know, I'd be able to show you all kinds of, you know, market structure shifts and swing highs and things like that. So let me go ahead and show that to you real quick. Let me do that best, probably on the 5-minute chart. We'll take a look at that. So all kinds of very, very interesting things were happening. I'm actually going to zoom right in on the 3-minute just to give you a heads up, or just to show you what it is I'm looking for. So part of the smart money concepts is to find who's in control and then determine a bias. So in order to do that, I need to identify the trend. So in this case, the trend is we hit the swing high up here. Go ahead and take the magnet off. We hit the swing high up here at about 30,312, right? Started to march down, lower highs, lower lows, over and over again, right? Okay, and then finally, bang, we ended up touching right around 30,000, 30,027. The sell side liquidity got taken there, which you can see with this order block right here. Okay, sell side liquidity gets taken. We push up. We have a slight market structure shift. Debatable, honestly. It's kind of reaching to say that that is a market structure shift, but I mean, technically, yes, it did take out a previous swing high here. But it's really, really close. In my opinion, the actual market structure shift didn't occur until later, because the area that we really needed to break was right here. Let me go ahead and make that nice and big so everyone can see that. And we'll mark that as yellow. That's going to be our change of character, or our market structure shift. Okay, that's what I'm going to use for the entire time on the channel. Okay. All right. So after that, we had that move, started putting in higher highs, higher lows, chopping around. We did challenge that, got rejected, challenged it again, got rejected, and then finally had the official market structure shift here, or the market change of character. That is a noticeable and unmistakable change of momentum, okay? It's one of the primary things you're going to be looking for. After that, we had a really energetic move up, set this little swing high here, and then came back down and held support over the market structure shift. We then, when we set this little swing high here, that created a new swing high, sorry, need a thesaurus Thompson, that we went ahead and broke. That is a bullish break of structure. That's what you want to see. You want to see Bitcoin doing that in order to get continuation. You want it to have those types of moves where it takes out previous swing highs, okay? So it created that. We then set a new swing high on that move right here, okay? After that, we pulled back down and held support thereabouts on the previous swing high there. Had a nice move up and another bullish break of structure on this candle, which did not get immediate continuation. It actually pulled back down, and that is because this white line you see here is the top of that symmetrical triangle that we have been consolidating in and that we are currently breaking out of. Which is very, very common. After you get a breakout of a major consolidation, it's very, very common to see a retest of that previous area of resistance. So we did that. Then we have another energetic move up, quick little pullback, and now we are challenging yet again another swing high right there, which we look like we are about to get another bullish break of structure, and by doing so getting continuation to the upside, hopefully. So I ended up taking a trade on, and I'm going to have to find it because it was actually a little bit ago. Clean up the chart a little bit because you guys don't need all that. But I just wanted you guys to see that that's what I'm looking for. That's the real trends that I'm looking for. Every time Bitcoin is setting these new little swing highs and coming back down and setting swing lows, it is creating order blocks, areas that if the price returns to, will likely interact. Will likely interact with, hopefully holding support. So I'll go ahead and mark these in purple. We'll do those there. Hopefully you guys can see that. I'll make it a little brighter. Okay, everybody should be able to see that. Let me just go to studio mode and make sure that that's correct. Okay, good. Everyone should be able to see that. So there's the bullish break of structure there. But we created these order blocks on every single one of these moves. So they are all potential areas that, number one, would be good for good buying opportunities. But also they are potential areas of support in the event that we start coming back down. And every time we set a swing low, that's exactly what we're doing. So that's 3 or 4. I mean, there's another one down here. There's another one down here, but I'm not going to go ahead and mark those unless they become relevant again. So this will be the new one. And that's what I'm looking for. So there's a nice bullish break of structure there. Let's zoom out on the chart and see where that leaves us. We are now challenging this, and actually we just challenged it. So this is also a bullish break of structure, but it's on a much longer time frame. I think it's actually more appropriate to call it resistance as opposed to a bullish break of structure, even though it is. Just because it was, in relative to all of these, it is a much longer time period ago, but no less significant. So, I mean, that's a pretty important area right there. We're clearly wrestling with it. There was a bit of a rejection there. I'm currently up 111 on this trade. So now what I'm going to do is, first of all, I'm going to go ahead and get rid of these so that I can actually see the chart, because I am in the middle of a trade after all. But I wanted you guys to see those order blocks because I think they're relevant. I think they're important. And I want you guys to pay attention to things like that from now on, because you are part of the Menace Militia, which means you are sophisticated and smart traders know where the order blocks are. Okay, so I'm going to go ahead and move this into profit, but I'm not going to get too terribly greedy. Let's see, we're up 119, so I'm going to go ahead and put this here at 316 or so. And it'd be about $40 or $50 in profit or so. Let's see. Let me zoom in on this. Maybe I can find a better area using the 1 hour. So where I just put my stop loss there is directly below this order block we just created. Well, it's actually in the middle of that order block because the order block is here on the ultimate support is on the wick. So actually, now that I think about this, I think it's actually a little too early for me to be doing that because a rejection here could put a retest in and instantly stop it out. So trying to call an audible here. No, I think I'm actually going to move it up. And the reason I'm doing this is because we're encountering a very significant area right now. If we get rejected on that, which we are very likely to do, I don't want to just barbecue the money. I don't want to leave it on the table. In the event that it gets triggered, I will start looking for a new entry, right? But as of right now, I've locked in, I'm guaranteed, roughly $80 on the trade right now. So what I'm hoping though is that we get some kind of a bounce here on the the 9 exponential moving average on the 1 hour chart. That's what I'm looking for. That would be nice to see. I'm getting any help anywhere else. There is an imbalance that was created here, and it will be officially there once this candle closes here. And it will look something like this. It's another way of saying this is there is a inefficiency on the chart. There is a fair value gap, and in this case, it is a bullish fair value gap there. Okay, it is a void in the market. It is an area where price is likely to return in order to fill the orders that did not get a chance to fill. And if it closes that before, if it closes this green box territory I just created here, that fair value gap, which it just did. I got to turn down the volume on that. It scares me in my headphones every single time. Okay, so we went ahead and got stopped out of that trade. All I was saying is that that imbalance would not even, there's no point in even drawing it if it just goes ahead and gets closed instantly like that anyways. Okay, so that went ahead and took us out of the trade. That's okay. So that was a nice trade. All right, let's see. What else can I get into here? All right, looking at the 15-minute. Got about 8 minutes left on that right here. That is, as of right now, a rejection on a previous swing high. It's an equal high, which means that as of right now, the bulls have failed to continue to push the price higher. So it's moments like this when bears will take over. But what I will say is that even though it was an equal high here and here, sorry, I got to remember you guys can't quite see everything. Even though it was an equal high from right here on the spot price, on the RSI, at least on the 15-minute, there was actually a little bit of divergence because the relative strength index is putting in higher highs at the exact same time, which means that there was actually more strength on this rally than this rally. So it doesn't, it's not everything, but it lets me know that there is a little bit more buying energy on the reattempt of that area, which makes a lot of sense because it's deeper into the consolidation pattern and immediately following a big push down, followed by, it makes sense that there would be a much stronger push up. And this move up is much more violent than this move. This was much more gradual consolidation than a retest and rejection. This is just a straight line pretty much. So not really a straight line, but close enough. Okay, so what we have done so far is we are breaking out. We have broken out of that big consolidation pattern, but that doesn't mean we're out of the woods. It's not enough to break, it's not enough to break the downward trending resistance. You have to take out the top of the pattern. So what I'm looking for now, what I'm going to do is I'm going to run a Fibonacci retracement on it, and I'm going to use this swing high here for my top anchor point. And I'm going to pull this down using the swing low down here as the bottom anchor point. Okay. And I can see that when we initially fell down, we actually ended up holding support within the golden pocket here, which is the most commonly used and the most heavily scrutinized and heaviest weighted of the Fibonacci areas, arguably. I suppose an argument could be made for the 786, but the 618 is really kind of the fulcrum. You know, if you hold support on it during a down move, you're probably going to get supported and continue up. If you fail to hold the golden pocket on the way down and you retest it and get rejected, you're probably going to end up pushing down further. So what is happening now is we are starting to size up this. Now, I will say this, in the event that we do break this, there is all kinds of imbalances up here that have not been corrected. And also, the most common area, hang on. I'm going to have to pause my little commentary here because there is a trade coming. Yes, definitely. I'm going to go ahead and take this one. 17, okay. Sorry, guys, just 1 second, please. Daddy's got to make some money. Hold on. Is that pullback? 5 minute looks fantastic. That is a new swing high. I'm going to go ahead and take the trade, even though it pulled back. Did I get it? I missed. Oh, it's good till time. Darn it. Or good till canceled. I wanted fill or kill. My mistake. So now I got to go ahead and cancel this. Cancel all. There we go. We get in there. Order filled. Order filled. There we go. Okay, this is going to be for 1.4 Bitcoin. Pretty substantial trade. Okay, and I have my entry point here. So that means I'm going to set my stop loss below the liquidity right here, below this order block here, and hopefully it's enough to hold. I guess we'll find out though, won't we? So I'm going to go to... I will make a screen for the order entry here shortly, guys. I'm sorry. Because this is actually really important. I want you guys to be able to do this, to know what this is, because you're going to be using the order entry all the time. Okay, so that's good. Go ahead and set the close there. Okay, good. So I have my stop loss in place there. It is currently below liquidity. I am below. Just want to see what moving averages I'm tucked underneath right now. As soon as you enter a trade, you need to be setting stop losses, period. If you're part of the market militia, you have made me a promise that you are going to do that. Okay, and if you trade without a stop loss, in my opinion, and I will continue to say this, you deserve to have your account blown. I really believe that in my heart of hearts. You will set a stop loss because you are a smart, sophisticated community of traders, and you are building strong trade mechanics and building and setting stop losses. Every single trade is part of strong trade mechanics, which the market menace militia is never lacking in. Okay, so now I went ahead and took that entry. We do have the bullish break of structure here, and the 5 minute is looking pretty strong. About 2.5 minutes left to go in this candle that's being created. I can tell just by how volatile it's being relative to the rest of the moves that there is a lot of energy. There's a lot of volume happening here. The order book is going absolutely crazy. I really do think that that has the potential to have a nice push. That was a long consolidation we just had. And that was a really powerful move we had to the downside. So, you know, it should have an equal and opposite reaction that is equally as violent before it gets any kind of pullback, which actually it kind of has already. Well, actually, that's a good point. Let me go ahead and just measure that real quick. I'll go from the point of the breakdown to the swing low of that. That was 0.52%. So we're not quite there. Right there will be an equal reaction, which actually puts it right about here. This is my new target, by the way. This is going to be my new area of interest. My new target is going to be right there. That previous little swing high right there. Got to take that out now. That's going to be the next target for sure. And then after that, I really only have this, which is the top of the pattern. And then I can start thinking about what happens. Well, actually, I have another one right there too, don't I? Can't ignore that. That one's probably going to come into play too. I have to start thinking about what kind of Fibonacci targets are going to be available to me to the upside now. When I ran that Fibonacci retracement a few moments ago, go ahead and shrink this back down. When I ran that Fibonacci retracement from right here before, from right there, down to the swing market low, no swing low, I can see that my first Fibonacci extension level, get this out of the way a little bit. My first Fibonacci extension level is going to be right dead center of this imbalance up here. That is the 1.618 Fibonacci extension, this area right here. And I will go ahead and make that a different color so that you guys are able to see that. Let's do it in, nope, sorry. Try that again. We'll do the 1618 in orange. No, we'll do it in, I need a brighter color. There we go. Okay, the top of this little blue area right here, this is the first Fibonacci extension level. So in the event that we take out all of these swing highs here, okay, all of these end up getting broken by the price moving up, my real target here is going to be about 30,958, which is halfway into the imbalance that's there. So let me get my Fibonacci chart back to where it was, because this is actually kind of hard to look at. There we go. Okay. So yeah, the 1618 right here, the top of that is going to be the area that I'm sizing up in the event that we do get some continuation to the upside. But we have to get there first, which is easier said than done. So we've now returned below my my entry. We've actually not gotten continuation over the this area here. So let's zoom in on the 1 minute, and I want to see what's happening here. So far, nothing too terribly alarming. The pullback that's happening here is pretty normal. It seems to be coming back down towards the 21 exponential moving average on the 1 minute chart. Let's see if I'm getting help anywhere else. I have the 3 minute, I have the 9 exponential on the 3 minute time frame, which has kind of held the entire rally so far. So I am paying attention to that. In the event that I end up getting knocked down, probably to like here, I think I will go ahead and let the trade. No, I was going to say I'll let the trade go, but I'm actually going to give it a chance to grab support on some other key moving averages. Number one being the 5 exponential, or I'm sorry, oh my God, the 9 exponential on the 5 minute chart. Sorry. So that's what I'm looking at right now. Would really like to see that hold support. The pullback that's happening right here, unfortunately, there isn't a lot of imbalances here on the 5 minute. Maybe there are more on the 1 minute. Now those have all been mitigated. So unfortunately, that means the 15 minute. So there is only this gap here, but the truth is that if this ends up pulling back, it's probably going to come right to here to fill this little area where this previous swing high was. So I'll go ahead and mark that because I think that is going to be key. Okay, we'll go ahead and mark that there. I'm still below that with my stop loss, but it's not very comfortable there. And I'm pretty sure we just failed a couple important moving averages. Well, we haven't touched the 5 yet. Okay, that's not too terrible. Even when we got the pullback here, when we tested the previous resistance of the entire pattern, the pullback was only, it didn't even touch the 50 exponential moving average on the 3-minute chart. Let's look at the 5-minute. Okay, so when it did that, it pushed back down to the 21 exponential on the 5-minute chart. And that ended up being support. So unfortunately, I am below that at the moment. Or above that, excuse me. And there's that there. I'm pretty much liquidity bait right now, which I don't like. So I am going to tuck tail and run a little bit. I want to get below the moving average, but more importantly, I want to get below this order block down here in order to preserve the trade. I don't think it's going to be worth it for me to close the trade at this point and try to re-enter at a lower price. I would have been able to do that if I would have closed it up here, but the unrealized loss would have been at about, or if I would have just done it just now, would have been about 90. And that's not really what I'm trying to do here. Not trying to realize the 90 just yet prematurely, particularly because I have a bunch of other moving averages that are potentially protecting me. So what I'm hoping is that ends up holding and we get the continuation. 5-minute RSI is definitely overbought. Up here in this range at 80, that is considered overbought. But on the 15 is as well at 73. Let's look at the hourly. Got room to go. Okay, definitely have room to go on the hourly. And we certainly have room to go on the 4-hour. I mean, the 4-hour can get all the way up to this range, which is 91, before it has any significant kind of pullback. So we are really starting to put in some nice moves on the 4-hour RSI. All right, going back to the 1 minute. Zoom in, monitor the trade. That is technically a lower low. And had I not moved, I think that would have triggered my stop loss. There's an imbalance up here that needs to be corrected. That's good support there. Although I will say that on this move, we actually haven't really respected the 50 exponential moving average on the 1 minute chart. You can see that it dips below it. It's done that a few times before it got any kind of continuation. So I don't really think that that's the best one. I think probably using the 5 minute here is going to be more accurate. It's going to be more helpful. So yeah, honestly, I wouldn't be surprised to see Bitcoin do this, where it came up here, has a bit of a double top on the 5 minute, and then pulls back down to confirm support on the top of the pattern. Because this right here, this is nothing. That's one quick little touch that lasted maybe 15 seconds before it got continuation up. So I would not be surprised to see Bitcoin pull back through this imbalance here, even breaking this moving average and coming and confirming its breakout, at which point I will assume about $110 loss. I would think it's something like that. So hopefully it doesn't happen. Hopefully we just get supported and we rip. There was an implied imbalance here on the 5 minute that has about 2 minutes to go ahead and close itself before I have to consider it. That was on a smaller time frame, I believe. It was on the 3 minute. No, it was on the 1 minute. Did I draw it by mistake? It's on the 15 minute? It's a 15 minute. Okay. That's a very small gap too, though. I mean, you're looking at, 300, or what is that? $311, $310. I mean, that's only like a $15 gap. So, I mean, it's not a terrible gap to ignore. But still, Bitcoin is kind of anal retentive when it comes to filling those voids. All right, now we wait. So much of trading is just waiting. It really is. 97% of my day is spent just watching and just doing what you're seeing me do now. Just cycling through the chart, trying to find different areas of support and resistance on larger and smaller time frames. Running all kinds of Fibonacci's on different time frames, checking the RSI nonstop. I mean, that's kind of the trader's life, man. We did have that bullish break of structure there. I'm a little bit surprised that it pulled back so quickly. It's because we didn't actually close the candle above it. That's why. It's a nice move, though. It definitely is. I mean, it's perfect, actually. You got this unbelievably clear area of sell-side liquidity getting taken. You have a nice move up, a pullback, multiple pullbacks, actually, none of which are setting lower lows. Market structure shift when it breaks this yellow line, runs up here, pulls back, holds support, setting a higher low. Bullish break of structure here, sets a new high, comes down here, sets a higher low. Bullish break of structure. You guys are kind of seeing the pattern here. I mean, that's something that I'm going to drive home every single video. Every single time I step on this microphone, you guys are going to hear me talk about higher highs and higher lows. They are critical. They are absolutely critical. Like, your pattern can look terrible, like on one time frame. You could be looking at the 1 minute time frame, and you're just putting in lower highs and lower highs, but at the same time you are sneakily putting in higher lows. I mean, higher lows to me are so important because like as far as like determining bullish bias. Now, obviously, if I'm trying to go short, I want to be seeing lower highs. That's the same as saying higher lows when you're in a long position, when you're bullish. So yeah, that's it. I mean, setting higher lows is so important. It really is. That's a decent pullback right there. It's a little bit of a cool off. You guys got to remember too, like, nothing ever goes up in a real straight line. Like, there's always going to be some sort of correction. There's always going to be a cool off. Now, we are probably getting towards the top of this move, at least using the 5 minute time frame, because I can see that, we just hit 78. I mean, the 5 minute does have the ability to get pretty deep into the overbought, or excuse me, yeah, the overbought territory as well as the oversold. And here's a good example of that is when we had this move down here earlier today. I mean, we got all the way down to a level of 13.5 on the relative strength index into the oversold territory before we got any kind of a correction. So, what's true on the downside can also be true on the upside. So, let's see. It's about 27. Excuse me, it's about 17 below that. So, this can come up to somewhere in the 90 range, 92, 93, before it's really going to be considered overbought. Before you'll start to see like forced areas of like, there's no strength left. There's no room left on the RSI. Yeah, RSI is actually a really good way to try to anticipate large cycle movements as well. And I will do so. Part of the channel is going to be this. It's going to be me recording my trades as they happen, and then uploading those for you guys to learn from. But the other part, or another part of this, is going to be a more fundamental understanding of crypto as a whole. Particularly helping people to understand Bitcoin, the blockchain technology, and covering more of like the fundamental news part of crypto. And there is so much news to cover. And the reason I want to do that is because I really do feel that it's key for the Menace Militia to have a firm understanding of what Bitcoin is and why it's important. Because not only do I want you guys to be smart in crypto, I also want you guys by learning about crypto, by learning about Bitcoin, you will inevitably be exposing yourself to all kinds of other markets as well, which will help round you as an investor. It will help broaden your financial education horizons and expand your financial vocabulary, which is absolutely important. Now, the thing is, man, like we were never really taught this, and that's unfortunate. And we are a generation of people, and there's so many generations never received a formal or a proper financial education, and you could argue that that's even intentional to create a working class. Sure, but I want us to do better than that. And part of that is understanding emerging markets. And this is absolutely a sector that is growing exponentially faster than any other technology in history. Bitcoin's being adopted 2.5 times faster than the internet. So, I mean, all of that to say that another part of this channel is going to be helping people expand their fundamental understanding of Bitcoin, of other markets, of the world of finance. And I'm going to try to do it in a way that is easy to understand, that is relatable, and we're all going to grow and we're going to do it together. And it's going to be incredible. And I'm so, so happy to be a part of this. And I'm so happy you guys are here. I can't wait to see where we are in a year. I can't wait to see where we are in 5 years. I just love it. I love it. Thank you so much for being here, guys. You could be anywhere in the world, but you're here. That's the Menace Militia, man. It's powerful. Or it will be. Great talk, Dad. Focus on your trade. Okay. Okay, so far on the 15-minute, we've had a double top, a bit of a correction, a bit of a pullback. We have not corrected the 15-minute imbalance there. So I want to start looking at the 5-minute. Looks like as of right now, the 9 exponential moving average is holding on the 5-minute time frame. But it's weak at best. As of right now, I'm not getting higher highs. We need to correct this imbalance as well. You do not want to see a double top here, followed by a strong impulsive move to the downside, and then that not get immediately filled before you get continuation down, because then it becomes a very strong order block later on. But all of that being said, we do have a new swing high that we are trying to take out. That is actually a little bit higher than that one. So I'm going to go ahead and delete the other one, because if you remember, that is stemming from back here, which we are currently below. However, we have already broken this, so now this is the area that needs to be taken out. Anything short of taking this out will cause the bears to rally and the bulls to shrink up, and my account to get a little bit lower than it was 20 minutes ago. Well. Okay, so far we have not filled the imbalance. We are still technically holding that area. We have yet to close a candle, but I mean, 2 minutes and 20 seconds is a lifetime in crypto. I mean, that price can dance. That thing can get legs. 2 minutes, trust me, 20 seconds alone is a lifetime in this market. Especially like when you're challenging an area that you need to hold. So 2 minutes, I mean, you can live 10 lives in that amount of time. But overall, the structure is still good. Bulls are still definitely in control at the moment. I won't consider them out of control or the market to have shifted completely until I see confirmation of a move down below this swing low here. That would be a market structure shift to the downside, getting some sort of confirmation. That would simultaneously break the bottom, the support of the pattern we just broke out of. If that happens, we are almost assuredly going to get a move down. But as of right now, that has not happened, so my bias is still technically bullish. And it's appropriate for it to be bullish because we have not set a lower low. We have only been encountering resistance at a previous area of interest. Let's look at the hourly. So that is our first hourly candle for the day right there. Turn that down a little bit. There we go. Okay, everyone should still be able to see that just fine. That it was too dark. I couldn't see inside of it. So this is the first hourly candle of the day. It's a nice one. It did end up giving us a higher high than right here. And this hourly candle that we are forming now actually has a pretty nasty top wick on it relative to the pattern. I mean, honestly, though, that's not really that much money at all. That's only about, what, $50, $45 or so. So, I mean, it's not much, but relative to the pattern, it looks worse than it actually is. But, I mean, we got 25 minutes to fix it, so I'm not too terribly concerned about it. My guess is that what's probably going to happen here is if we don't immediately get continuation, we are probably going to come down and test the support of this pattern here. That's probably what would end up happening. But I guess we'll see. Oh, if you guys get an opportunity, please check out Cool Nerd Crypto over on Facebook. It is a Facebook group that I've been involved with for about 3 years, ran by an incredible guy. Mansa Musa is what he goes by, and he is the head of the Cool Nerd Army. The Cool Nerd Crypto Army is a fantastic group. Right now the group's about, I think, like 6,000 strong or so. That's where the majority of my content has been for the past few years. As of now, being that the YouTube channel is now up and running, this is where the majority of my content is going to be now. I am also exploring Twitch, Twitch streaming, and I still will do Facebook Lives as well. Or at a minimum, I will upload my YouTube videos into Cool Nerd Crypto. But yes, if you guys get an opportunity, please check out Cool Nerd Crypto. And, shout out to Mansa Musa and the entire Cool Nerd community. You guys are not forgotten, I promise. And we wait. I do think Bitcoin is probably going to have a really big move. Just the setups that it's been having over the course of the last few hours, over the last few days. Actually, while I wait for my fate to be decided on this particular trade, let's look at the daily on Bitcoin. Take a look at some things. Let me go ahead and get rid of these. Get rid of all that, whatever. I don't even really need it anymore. Sorry about the little arrows, by the way. Those are all of my, every time I take a trade, MEXC will populate those arrows. I'm still familiarizing myself with the exchange, so I'm trying to figure out how to get those off of there. If any of you actually know, it would be amazing if you could let me know, because frankly, they're very annoying, so I do apologize for those. Yeah, so there's been a lot of trading going on in this area. A lot of chop too, but on a more grand scale, Bitcoin had a very powerful move up to this range, a really powerful move. So now that we're kind of chopping between support and resistance up here, it's very much like an ascending channel. But the range is, ascending is a strong word. It's pretty much flat. It's ranging in this area between like 29,005 up to 31,005. So it's a huge area to range. It's $2,000 range. When Bitcoin finally makes a move out of here, whether that be to the up or the downside. It is not going to be small. It's going to be huge. And it is either going to be a violent move down to these ranges where it originally broke out from, because we have all of these imbalances here, these inefficiencies, these voids, these fair value gaps that have not gotten filled. Okay. And that's a lot of ground to cover. You're talking about a range of 27,000 up to 29,500. So I mean, that's a $2,500 range. That's not small. That's a lot of negative space that could be attracting the price down. But that being said, if we do end up getting a break to the upside, there is an even larger imbalance on a much larger time frame. This is actually stemming. Excuse me. This is actually stemming from the bear market, and it's, I believe, over a year old. A huge amount of imbalances over here from the way down. The areas that we're in now are stemming from this order block right here. This is back in like May of 2022 as we were pushing down. This is before Bitcoin even found its cycle bottom at about 15,500. This was very much an inducement zone. It was a pause mid-rally. Kind of, the price was pushing down really, really hard. It needed to take a second to collect itself before continuing the trend down. That is the same area that we are currently interacting with. We did it. We interacted with it in April and got rejected. Now we have reattacked it for the second time. I actually think that there is a very good chance that we do get the continuation up. And when we do that, we start sizing up some pretty important areas. Now, you guys know how much I love using my Fibonacci. So I'm going to do that right now, and I want to show you some very interesting longer term targets. So stemming from the top anchor point in April, which is like 31,000, down to 24,700, which is the swing market low on this trend line, I can see that my Fibonacci extension, number one, goes right into that very, very crazy area that I just showed you here. That's number one. So that is a target in and of itself of 34,925. So basically 35K. Now, if we do get that far up into this inducement, into this fair value gap, into this imbalance, it is very likely, in my opinion, that we are going to get. We are going to close that fair value gap and hold support, and then you could start sizing up areas like 40,000. I mean, that's not even to the 2618 Fibonacci extension. Let me tell you this right now. Side note, in the event that BlackRock's ETF or any spot ETF is approved between now and then understand that we are almost assuredly going to those levels. And we could even be talking about Bitcoin all-time highs pre-halving, which has never happened before. But that Bitcoin spot ETF, I tell you, if that gets approved, man, that is the most bullish news ever. I mean, that opens up trillions of dollars that can come into the Bitcoin market at that point. I'm talking about IRAs, I'm talking about retirement funds, pension funds, sovereign foreign wealth funds, all kinds of things can start coming into the space if an ETF is offered. And if nothing else, a Bitcoin spot ETF requires the owning organization to hold the asset in which it's issuing the ETF shares from. So in that case, it would be BlackRock. Let's say it's BlackRock, which is the largest asset manager on earth with $9 trillion of assets under management. They would have to hold Bitcoin and then issue shares based on their Bitcoin holdings, and also based on as people buy and sell in and out of the exchange traded fund. They would actually be buying and selling Bitcoin proportionally based on that, which is very cool. That's why it's so exciting, because Bitcoin already has a finite supply of 21 million. Now, when you start allowing large funds like that, large asset managers, to offer a Bitcoin spot ETF, it puts an already finite supply that is already under a supply crunch because of the halvings that happen every 4 years, where the amount of Bitcoin that is produced every 10 minutes with every block is reduced by half. The block reward is cut in half. Don't worry if you don't understand what that means. I'm going to be doing a full Bitcoin fundamentals breakdown where I explain the blockchain, where I explain public and private keys, the encryption behind it, and I will make that easy for everyone to understand. I promise. But yeah, anyways, in the event that the Bitcoin spot ETF happens, it's going to put pressure on the supply, which is already going to be under pressure with the halving event approaching in April of 2024. So we're about 9 months away from that right now. So I mean, it's a perfect storm. So now, conversely, if the SEC does what they've done in the past and rejects a Bitcoin spot ETF, um, that's going to be bad news. I mean, everything I just said pretty much goes out the window, and we resume businesses as usual. Um, so, yeah, let's hope it gets approved. That'd be nice. Love a big rally. But on the chart, anyways, I mean, just looking at the technicals of the chart, the Fibonacci extension, the first Fibonacci extension area of the 1618 is up at about 35,000. So that would be target number one, which is kind of a shallow target based on what we're talking about. But anyways, during that explanation, I almost got stopped, actually. Down about 119 on the trade right now. So far on this channel, while doing these videos, I have only had one successful trade today. Good start. It's okay. My trades have been fundamentally sound. That's really what I'm more concerned about. Like, were my entries sound? Did I take the trades that I was supposed to? Did I wait for the good setups? Or was I just rushing in and out of trades and trading for the sake of trading? And I can honestly say that I wasn't. I was waiting for good entries, and there is always going to be a level of variance when it comes to your success rate. I mean, you're not going to nail every one of these trades, guys. I hate to burst your bubble. Like, you're never going to have 100% success rate. Like, you might have 1 or 2 days a month where you're just on it and you're just smoking every trade, like you're nailing them all, right? But I mean, it's variance, because I promise you, for every one day that you have where you have 100% accuracy rate, you're going to have 15 days where you have a 40% accuracy rate, and that's generous. You're going to have some days where you have a 0% accuracy rate, and those are fun. Like, those are the days where you're like, maybe I should get a 9 to 5. Maybe I should have paid more attention in school. Like, maybe I shouldn't have smoked weed when I was 14. Maybe that would have been a good idea. Things like that. But it's all about your commitment, your dedication. So I hope YouTube doesn't ban me for saying that I smoked weed at 15. I guess we'll see. Okay, time for my disclaimer. I am a guy on the internet. I am not a financial advisor. I am not a certified public accountant. I am not a broker. I am a day trader, trading under my own name, under Market Menace Trading. I am not a financial advisor. Please do your own research. This is not financial advice. Please do your own research and never invest or risk or trade more than you are prepared to lose. Okay? There's my disclaimer. Okay, so we have closed the imbalance at this point. Sorry. We have closed the imbalance at this point, and we have actually created 2 new ones to the downside, which is not good. What we're trying to do now is we're trying to hold that 21 exponential on the 5-minute chart, but we're going to have to get some continuation. Okay, there we go. That's not bad. The pullback here down to the 9 exponential moving average on the 15-minute chart. That's pretty standard stuff. So I am very glad that I adjusted my stop loss because it is comfortably below the 21 exponential. Excuse me, the 9 exponential on the 15-minute. So now I am hoping that we are going to get supported here, break back above the 300 exponential, and push higher. I would really like to see that happen. If we do, then we can really start to size up some of those other targets, because that would be essentially confirmation. I'm actually glad that I got rid of the triangle because it's kind of distracting. You know, the pattern analysis is okay, but I'm not really too terribly concerned right now about where other retail traders are putting their stop losses, because I've already kind of pulled back at this point, and we are either going to get a rip up or we're not. So I'm actually kind of glad that I got rid of that. Okay. There's the break of that exponential right there, the 300 exponential. There's the break of that right there. So now we have to continue to push. So on the 5-minute. So whenever you see that, whenever you're trying to see if you're going to get continuation, you want to use different time frames. When you get a pullback, and let's say, initially I was looking at a 1-minute. On the 1-minute, initially, I could see that I was failing to hold these moving averages, right? Then I pulled back down here, and when I see the price starting to interact with heavier weighted moving averages on smaller time frames, I know it's probably time to go up in time frame and see what other areas it's interacting with. So in this case, as of right now, we are above the 9 exponential on the 5-minute chart. And now that we're up there, I can start moving back down to my smaller time frames to see what's happening. So here's a good example. Ready? Check this out. This is fantastic. I got a annoying magnet on. Try that again. I got the push down to a swing low. I came back up and rolled over, set a lower low, lower high, big push down, supported. Now we're starting to march up. A high, a higher low. And now we are trying to do in a very, very short time frame a market structure shift right there. All of that to say that this is what I look for when I'm looking for reversals. We have a downtrend, a short-term downtrend here. And looking for the market structure shifts here, the change of character. The reason that's important, guys, is because it lets you know that the short-term downtrend is likely coming to an end when you have a change of character or a market structure shift like that. You want to hold support on it and get continuation, and then start challenging previous swing highs. So that's what I'm looking to see happen here. I have a clear downtrend, lower lows, lower highs. I have a energetic move down, creating a imbalance. Okay, creating a fair value gap here to the downside, a bearish fair value gap right there. And now we have fought back up and now closed that bearish fair value gap. That's a good sign. You want to see that. Now what needs to happen, though, is we need to have the actual market structure shift in order to consider the short-term downtrend over. We need to have the break of that swing high right there. That will be the change of character, and then we need to hold support on it and get continuation. That's what we're looking for. So the reversal is almost confirmed, but doesn't mean anything until we get above that yellow line there. taking a bit of a deeper look into the order book right now. Going in $100 range, $100 intervals. And I'm trying to see who's winning right now. Okay. There is a lot of resistance at 30,600, which is going to be up here. That seems like a world away right now, but trust me, Bitcoin can get there very, very quickly. So right up here. So what happens up there? Why is there so much resistance up there at 30,600? There must be something there. Yes, right here. This is kind of where one candle body closed and another one began. That is kind of like the halfway point between the two between the two there. Also, I have a small imbalance here. Sorry, a little bit of a fair value gap. It's not huge, but really what I'm more concerned with is this right here. That is my real target on this trade. Every time I've taken a long position, it is with this target in mind today. That's what I'm looking for. I want to see a move to that area. So my entry is this. And the reason I want that so badly is because I have an outstanding risk reward with that trade setup. Now, if you remember, the 1618 Fibonacci extension zone is right here, right at about 30,950, which is halfway into that imbalance. So that gives me a beautiful 4.76 to 1 risk reward. So yeah, I mean that's roughly a $500 or $600 trade right there if it goes through. It's a big F. Okay, we did not get the market structure shift there on the 5-minute. We are rolling over. Well, that's fun to see. There was an imbalance here that is now closed. There was a fair value gap right here in this range from the top of this candle to the bottom of this one. So pretty much the entire body of this candle was an imbalance. That is what just got tested and is currently being tested. So hopefully we get supported there, and we will get continuation up. Other than that, there actually isn't really a lot of too many imbalances to the downside. Right here is one. Okay. I'm just looking for reasons that this will attract the price. I'm looking for things that may potentially attract the price before it's allowed to get some sort of continuation. So there is a pretty significant imbalance there. And all of the other ones are more or less, actually they are all mitigated. Well, I'm actually not willing to take a larger loss than that. That would actually be a pretty considerable loss for me. That actually violates my rules. Let me just double check that real quick because it may require me to change. Yeah, so that would be 167. It's about another $80 or so. Okay. I'm trying to decide if, because it's very, very close. It's very close to my 2.5 rule. And I don't usually like to do that. However, the consolidation pattern is over. Bitcoin has broken out of that. Or has it? Oh, it hasn't even broken all the way out of the entire pattern yet. Okay, well, that's very relevant. Now, what it has done, here, let me go ahead and make this a little bit bigger. What it did do is it broke out of this descending area, this descending level of resistance, but it is actually not all the way out of the pattern yet. That right there, well, excuse me, breaking out of that area of descending resistance, that is what we got rejected on. That was an oversight on my part. So, yep, I definitely deserve to get wrecked on this trade, for sure. So now I have to start thinking about mitigating risk. Now, do I actually see real weakness on this chart? No, I don't. I see a pullback after a pretty powerful move up, testing resistance here. But so far, Bitcoin has not put in lower lows. So for now, I'm going to run with the trade. We are testing that area right there. And as I look at the 5-minute, I actually think that that's probably not the best place to put that. I actually think it's going to be up here. I like that better. That's a better market structure shift for the downtrend to break. I like that better. So yeah, until it breaks that, I'm not going to consider it getting continuation. Not yet. There we go. What it did do, though, on the 1-minute, what it did do is after we had this little rally, it pushed back down, set a higher low, and by doing, when it did pull back, it did have a bullish break of structure. It just did it prior to the market structure shift, which is okay. I mean, it has to build from somewhere. It can't just immediately reverse. So that's okay. So hopefully that holds. Maybe we get a pullback here, and then we get the continuation up to the more solid, more obvious market structure shift or change of character. Okay, a little hesitation in the last candle. We are on the 1-minute chart. And we are waiting. We're waiting to see what happens. Right now, Bitcoin's kind of challenging this area here, which is technically a swing high, but it's so weak that I don't even want to consider it a swing high. That is where I originally had the market structure shift occurring. And yes, technically it is, but it's not strong enough for me to consider valid yet. I will say that we did have an imbalance here that got closed almost immediately, which is good. It's a good sign. And we have since created a bullish fair value gap right there. Right there. So if you were going to take this trade, let's say you were not in a trade right now, the way that I would do it is I would identify a fair value gap like this. And given that this was the swing high, I would put my entry just above it. I would put my stop loss below liquidity here, something like that, depending on how big or how small you go with your size. If you go on a smaller size, you are able to have a larger stop loss. The ideal place to have a stop loss is actually where I have mine, relative to this pattern here, because it is below an area that was just tested, and I have a lot of moving averages between my stop loss and the price. that would be a decent entry. I mean, it's not great because it's not a huge fair value gap, but it does meet your criteria. So just so you know, that would be a good way to do that. Okay, we are attempting to have another bullish break of structure here, which we technically just got. But we haven't really had a significant pullback since breaking the last one, so I'm going to hold off on declaring that an actual bullish break of structure, even though we did have a swing high here and we just took it out. It wasn't very large. This is a much better example of that. Okay, now we are testing these swing highs here. Definitely want to see these swing highs here fall. Okay, so we went ahead and took those out. That's good. So now we are on approach to the change of character. Once we break that and hold support, it will be a confirmed change of character, indicating that the downtrend is over. We are not safe until we break that. I mean, we're not safe. You're never safe, but we can't really breathe a sigh of relief until we get back above that. Failing to break the change of character here, well, that's a correction of the imbalance. Hopefully that gets supported and rebounds. Rebounds. That's new. Okay, so the imbalance has been corrected. Or at least that imbalance has been corrected. Looking for the push. Well, I wanted to swing low so that I could have a good bullish break of structure. Well, there you go. There's a new area. I am glad that that got filled now and not later, though. Okay, we are retesting the previous swing high here. When we just had that bounce, I want to see what that got bounced off of. Looks like we were trying to hold support on the 9 exponential on the 5-minute chart, but I'm betting that there's something else there. Yes, there is. When we just pushed down, it was right around here then. So that was actually a bit of a retest of a much heavier weighted moving average on a larger time frame. That is the 400. That is the 300 exponential moving average on the 15-minute chart. So it's a much, much heavier weighted moving average. This trade's got me in a bit of a sweat. It's down to 84 right now, which pretty much wipes out the one win that I had while trading. Trading for you guys anyways. But I promised you guys were going to see the good, the bad, and the ugly. And sometimes it's ugly. And I think that's really important. I think a lot of traders online, particularly on YouTube, I think they like to cherry pick their trades a lot. I think they only call it ego, call it, they want to come across as experts. And I understand. I do understand that. It's marketing. People, I get it. I really do. But I also think that there's a level of dishonesty there. Because a lot of people that are watching these channels are new investors. They have no experience. So when you show your audience only your best highlight reels, I mean, you set them up for failure. And I really believe that. I actually think that that's very irresponsible to do, to only show your best trades. I mean, if I wanted, I could show you guys my best trades. You'd think I'm the greatest trader in the history of trading, but I don't know. That's not the type of environment that I want. I actually think that that is destructive and a little bit manipulative. No shade to them like that. And I'm not trying to pick on them. However, I do think that if you're going to put yourself out into the public purview and you're going to be speaking to, and forgive this, but an impressionable audience that may not understand the dangers of trading, you don't do them any favors by just showing them your highlight reels. Show them the bad stuff. I want you guys to see all of my bad trades. I want you to see every mistake that I make, because if I make that mistake and you get to see it, maybe you don't make that mistake. Maybe it spawns you to come up with a new strategy. Maybe it inspires you to I don't know, whatever, make you money later in some way. Like, I mean, it doesn't do you guys any good. It actually doesn't do me any good either to just cherry pick my highlight reels of my best trades. You know, I actually really like it. I really like that I get to be honest with you guys like that. It's nice. I don't know. I don't think that there's enough of that in the trading community. I think that there's a lot of shade. I think that people really are, I don't know. I don't want to say misrepresenting their trading ability, because that's not for me to say, because I don't know those people personally. I have no idea if they're great traders or not. And there are certainly some great traders out there. Um, if I can remember to do it, I will set up some links to some YouTube pages of people that I follow that I think are absolutely fantastic. There's a couple on, believe it or not, there's a couple on TikTok that are actually doing some really good work. I really like Tactical Traders there. Um, I forget it. I forget the name of the guy who runs it, but he employs the smart money concepts as well. But he's a forex trader. He did, as far as I know, I actually don't know of anybody else that is applying smart money concepts to the crypto market, because the smart money concepts was developed for forex trading. Um, and comparatively speaking, the forex market versus the Bitcoin, crypto, or even the entire cryptocurrency sector, is apples to oranges. The amount of volume that the forex markets experience on a daily basis is more than the entire crypto sector experiences in a month. I mean, it's just a huge market. Um, I'm actually one of the only traders I know, one of the first traders certainly, um, to apply the smart money concept trading strategy to crypto. Um, I haven't really seen anybody else do that. Maybe I'm wrong, and if I am, I will definitely admit that I am. But as far as I know, here at Market Menace Trading, I am the only YouTube channel that is employing smart money concepts to trade crypto specifically. But obviously, if somebody can prove that I'm not correct in that, I will certainly retract that statement. But as far as I know, I am the only one that is doing that, which is actually pretty surprising. I'm surprised that that hasn't happened. I mean, I have my ear to the ground when it comes to uh, the smart money concept or excuse me, when it comes to the crypto sector, and the YouTubers that are relevant. And there are definitely some that are not relevant. There are some that are only talking about like pattern analysis, and they experienced a lot of success early on. And they have some P&Ls that I'm sure are diminished over time. But I mean, a lot of those guys made their money early. I'm not going to call out who they are. Um, I don't know, just a lot of hype. We're not going to do that here. We're going to talk about fundamental concepts. We are going to talk about good setups. We are going to dive into charts. And if you are part of this community, I want you to ask as many questions as possible. And I want you to ask it until you're clear. I want you to hound me until I address your question. And I really mean that, because this is a complicated subject. This is a difficult thing to do. Don't let anybody tell you that trading is easy. It's not. It's not. This is by far the most cognitively taxing thing I have ever had to teach myself how to do. Without question. Nothing even comes close. And I mean, I still haven't gotten it all figured out. I haven't, in the interest of complete and utter transparency. You know, I'm here to grow, and I hope you guys are able to benefit from my experience, and I hope that I'm actually able to benefit from yours as well. If you guys have some ideas, please let me know. Share them. Share them in this community. Follow me over on Instagram, and that's going to be at Market Menace Trading LLC. That is newly formed as well. So also the Discord is going to be coming online, and the Telegram. I want you guys to be able to share your ideas. I want you to have multiple avenues to access me so that I can answer your questions, because there is nothing more frustrating than starting out your trading career and having a question and just running into the same content over and over and over again, hoping to find an answer to your one seemingly impossible to answer question. So outright ask it of me, and I will help you find the answer if I don't know it, and that is a promise. I care about. I care very, very much about the crypto community. And me starting this channel, me doing this has become kind of a duty for me at this point, and I take my duty extremely seriously. I believe that by starting this channel, I have incurred a debt, and it is a debt that I owe the Market Menace militia. If I'm going to put myself out here in the public view, then I need to be there for the public. So that's you, that's this community. That's the type of environment I want to build. Because it's so easy. I mean, there are places you can go, you can go to Discord, you can go to Reddit, and, you can try to post a question, and you wouldn't believe it, or crypto Twitter especially. Like, I mean, a lot of new people are new investors who have legitimately good questions, questions that everybody needs to ask, especially in the beginning, are being met with tremendous amounts of hostility from just bitter people. That is not the environment that Market Menace Trading is about. I am legitimately empathetic to new traders who want to understand the space, and I don't know, to me it's the equivalent of, like, if you pick on somebody for asking a question when they're brand new, like, that's the equivalent of picking on somebody who's brand new going to the gym. Like, yeah, okay, you've been there for a while, you're going to go pick on new people who, are just getting started. Like, that to me is just, that's inhuman. So that's not what we're going to do. There's a nice pop. There is a challenge of the market structure shift. That is a pretty quick rejection. That was on the 1 minute chart. So we have not had the change of character yet. We are working on it, clearly. Maybe putting the good intentions out there in the ether are going to have the crypto gods smile upon me. As soon as I say it, the candle drops. Oh my god, dude. I take it back. I take it back. Dude, I take it back. No. Alright. I didn't mean it. I didn't mean it. You don't have to show me favor. That's funny. It was so perfectly timed. That was your cue to get a bounce, by the way. That was your cue to push back up. All right, you don't like being told what to do with Bitcoin. Fine, do whatever you want. I will realize the loss if we come down, I think, probably past this point. Let me double check for moving average support. Man, that's a tough call, actually. I mean, we haven't even gotten below, we haven't even closed a 15-minute candle below this, below the 9 exponential. I don't think I can justify closing this trade early. Okay, we're going to get a retest right now of the 21 exponential on the 5-minute chart. Okay, there's the retest. Definitely a lot of volatility here. I've seen this set up a lot. This would be a very good short position if you were so inclined. You have the double top here at a key area of resistance. You have an energetic move down, a failure to return to that area, another energetic move down, and then a bit of a retest, and so far, rejection at what should have been a new swing high. So taking a short position here would definitely not be out of the question. But taking it right here, I think, would be a problem. Taking it here, not so much. You could definitely take that entry. You could put your stop loss above liquidity, and then have your targets. Oh my goodness, I messed that all up. So right there, you would take your entry somewhere within that imbalance. That's actually a pretty tight stop loss to have there. Maybe something closer to that. And then your downside targets would be down here. Probably down at this order block, I would think. And if you were trying to set up take profit zones, you would use previous areas of support to do so. So right there would be a good take profit, or TP1. Right there would be a great TP2. Right here would be a outstanding TP3, and so on and so forth. Finally, probably closing the trade entirely here at this level at 30,151. That is an area that we kind of had a inducement. We kind of had like a pause in the rally during this little block here, which eventually did push the price up. So I would imagine that there would be some decent support here. But I mean, if that ended up failing, then I would absolutely be sizing up these targets down here at 30K, which I'm not going to actually like mark right now because I'm not in a short, but that's how I would set that trade up in the event that I was going to take a short there. But I'm already in a long, so I'm not going to do that. Instead, I'm going to watch. So we had the pullback down to the 21 exponential moving average on the 5-minute time frame. We are trying to simultaneously get a bullish break of structure of our little swing high here, but also a market structure shift from this swing high that we created on the way down. That's what we're looking for. We had the energetic move down. We filled that imbalance, challenged a previous swing high, set a higher low, and now I'm looking for continuation. That's what you're looking for. Now, if this ends up dumping, it will probably look something like this. Like it'll roll over a little bit gradually, and then when it takes out this swing low, you will probably end up with a pretty decent move down. Which, if you didn't notice, would destroy my stop loss. Destroy. My stop loss. Okay. Are there any additional areas of support? Side note, when you guys are doing your trading setup, when you're getting your computer and everything, your work area ready to go, make sure you get a comfortable chair. Don't just get any chair off Amazon. Get a chair that you can comfortably sit in for hours. Okay? A lot of the gaming chairs that are out now are fantastic. Okay, that is a failure to set a higher low, or excuse me, a higher high. Wow, it's 10:30. All right, I'm going to give the video about 5 more minutes and see what happens. But then I'm going to go ahead and close the trade after that point, and go to bed. Do another one tomorrow. Always another trade. Okay, so that is a equal highs there. So that is also a break of this trend line here. Kind of hard to justify anything other than a break there. RSI is lower. In my opinion, that is probably going to get a pretty... Wow. Spoke too soon. Too late of a time frame. I can tell you that the 15-minute definitely has more room to go to the upside. That is not really considered overbought. That doesn't mean to say that we're not going to have a consolidation. But again, setting higher lows is everything. There is the 50 exponential on the 5-minute chart. Let's see if there's anything else. There's the 21 exponential on the 15-minute chart, which my stop loss is directly above at this point. Wow, there's two very powerful moving averages there. Okay. I'm getting below them. Yes. I mean, I'm not really guaranteed safety there, to be honest with you. But it is better. I would feel a lot better having the 21 exponential on the 15-minute chart as well as the 200 exponential on the 15-minute chart, protecting my stop loss. That would make me feel a little bit safer about it. Plus, this isn't confirmed that it's breaking down yet. I mean, not really until it breaks this swing low here, and then, these other swing lows. It was a pretty efficient move, though, for the most part. We do have this imbalance below here, which did not get filled, which it does look like it's trying to size up right now. Okay. So there's something else to consider here, as well. As this trend has been moving up, a lot of traders are taking long positions every time it comes down to this trend line. And that means that they're setting their stop losses all along this trend line. So when you get a break like that, if it can, let's say that this 5-minute candle or even the 15-minute candle, or actually I think this is actually about to close a half-hour candle, isn't it? Yes, it is in 1 minute. So if that half-hour candle can get back above this trend line, then I would actually just consider that a quick little sell side liquidity sweep of the trend line liquidity. And I'd be expecting to get continuation to the upside. I mean, that was a really strong move, actually, that we just had, relatively speaking. But I mean, I think Bitcoin is just warming up, to be honest with you. Got to get that area out, though. Let me start looking for additional areas of potential support. We get to play connect the dots. Okay, that's not bad. Okay, that actually makes a lot of sense. There was this trend line here, which got broken. We got a pretty strong move there. We did pull back to that. Okay. That's a possibility. It's a possibility that we come back down and confirm that. There's actually a pretty good chance that that will hold because I have the 21 exponential moving average here and the 200 exponential moving average there as well. So there is a chance that that will hold. Also, it already was tested once and held. It's very close. That's for sure. I think this one's going to make the ugly reel. Let me show you what I'm looking at. Ruh-roh. That's not fun. But that's life. It's a gross trade, actually. I have a unique ability to buy the top. So anybody who went short up here, you're making money because of me, just so you know. It's only because I decided to buy there. That's the only reason the price dipped. That's why. So you're welcome. I'm here to help. Okay, so that means if that's triggered to be about 160 down, it's not a nice, it's not a nice feeling. It sucks when you have a blown trade. It sucks when you have a couple blown trades in a row, actually. But at the time, with the information that I had, I think I had a decent call. That's how I choose to look at it. And it just didn't go my way. I mean, it ended up hitting a double top, but I think fundamentally the trade entry was good. Probably could have waited for a better fair value gap on the re-enter because I entered there after I had already had a successful trade, which I have now. I mean, if I were to realize it right now, I've completely wiped out. Proving the point yet again that it's not about how much money you make, it's about how much money you keep. You can have 10 good trades in a row and give it all back on one bad one. I mean, that happens, man. This is not a good pattern. That's very double toppy. I'm definitely getting continuation vibes to the downside. So definitely going to be needing this to hold support. The trend line that I drew a moment ago, going to need that to hold support because we are almost assuredly going to test it. That is a textbook double top. Well, here's the double top right here. That's a perfect short setup. I mean, it definitely is. The only reason I would hesitate to do so would be because of that trend line there. So I'm trying to think if there's any other reason for this to be pulling down like that. And the only thing that I can think of is that this imbalance didn't get closed and this imbalance didn't get closed. But, I mean, those are all the way. I don't know. I feel like if they were going to get closed, they would have gotten closed prior because they happen in very small time frames. As I look at the 5 minute, this is the only real significant imbalance that I'm seeing. So there is the retest of the 50 exponential moving average on the 5 minute chart. Still, technically, we have put in a higher low, but my guess is that's probably about to change right now. I kind of want you to see it. I kind of want you to see it get triggered. See if I jump when the alert goes off in my headphones. It's definitely showing weakness, no doubt. That's a lower low on the RSI. Yep, that's probably going to push down. It's got a ways to go until it gets back down to here on the RSI. So, I mean, that's about a 30-point move on the RSI. That is now currently challenging simultaneously the swing low here, which is now a lower low. And we are also testing that trend line there, which means I'm probably about to get wrecked. That's my guess. Would love to see that trend line hold and the imbalances that were created just above it get filled and a reattack. Would love to see that happen. And it certainly could happen. "15-minute RSI has rolled over." That doesn't look good. Looking at the 1 hour, hoping for some sort of support below. There is one decent moving average protecting me. It is the 50 exponential moving average on the 1 hour time frame. So another way of saying that is the 50-hour moving average. But, I mean, that hasn't really been respected too much. It was certainly respected for resistance, though. So maybe it has flipped into support. A guy can dream, can't he? So the reason that I accepted a larger risk tolerance on this trade was because of where it was breaking out, and the fact that it was breaking out of a very long-term pattern, a pattern that's been consolidating for the last 2 or 3 days. Where I failed, and I'm going to share this with you now, where I failed is I was really only looking at how that was being measured on the candle bodies. This is what I interpreted as the breakout, and it was. I mean, that was a valid understanding of it, but what I failed to take into consideration were the top wicks of that pattern. So you're not actually trading outside of that pattern until you take out the uppermost connection points of the pattern. So in that case, that's actually here now. So go ahead and get rid of that. Make that really big so you guys can see it. Right there, that big top line right there. That's what I failed to interpret. That was my fault. Yeah, I guess that's okay. Yeah, I'm about to get stopped. Which is fine. It's late. It's time to go to bed anyways. Okay, so at this point we have now retested the fair value gap here. We've retested the top of it. I don't know if it's going to get continuation back up or not. There's a slightly deeper test. We are almost assuredly going to test that. Yep, that was a test of the moving averages, and here comes the stop loss trigger. Really want those to hold. If it's going to get a bounce, it's going to do it right here. Failing to hold these two moving averages right now. If it comes down here, I really don't see it getting a bounce. I see it getting continuation and the shorts celebrating. I would see it probably pushing back down to this range, probably down to these order blocks here. I think it'd be a relatively powerful move to the downside. So if it doesn't hold right here, it's probably not going to. So again, taking a short position in the setup that I showed you guys would have been a pretty good play that has a high probability of success. But in order to do that, these moving averages would definitely, I mean, obviously they have to fail. So if it's going to get a bounce, a recovery, it's going to do it on these moving averages or shortly after breaking them and wicking. But other than that, I don't really see too much salvaging this. This is the 1 hour chart. That's the 50 exponential moving average on the hour. Yeah, I'm about to get stopped. It's been fun, guys. Hope you learned something. And there we go. All right, guys. The good, the bad, and the ugly. I promised it. If you guys have any questions, feel free to reach out to me on Instagram. That is at Market Menace Trading LLC. Feel free to DM me there. I check it as often as possible. Feel free to leave a comment, like, subscribe, and go ahead and hit the bell notification. Give you guys real-time updates whenever I do an upload. All right, that's going to be it for me tonight, guys. I hope wherever you are in the world, you guys are making money. And thank you again for being part of the Menace Militia. Take care.